What's up, everyone? Paul and Jason here with Cryptoversity. Jason, how are you?
Paul, I'm doing great. Welcome back to beautiful San Diego.
Thank you. Happy to be home. Guys, if you find any educational or entertainment value from this, please like and subscribe below. It helps us help you. And remember, we're not financial advisors, so please do your own research. My man, Jason. So, yesterday, something interesting happened, right? Shiba Inu pumped 30%. And I wanted to talk about it because I find it interesting when, Shiba and Doge pump because we know it's got some retail sentiment to it, right? What do you think about it?
Yeah, it's very interesting. So anytime you see Shiba or Doge pump, it means retail has shown in. You're correct about that, because really only retail buys those coins. But here's the real story behind it. So retail sees coins like Ethereum and Matic and many others pump over the last month, and they get FOMO, right? And they feel like they're missing out, and they think the bull run is back on, and they jump in. And the first thing they jump into is what they're familiar with, which is Shiba or Doge. But if you're staying crypto long enough, you'll see what's probably going to happen is retail. As retail shows up, whales see this and they start taking profit and they get out. And it happens time and time again, right? Whales make money off fish, and fish end up holding the bag.
Yeah,
Yeah,
I've been on both sides of the spectrum before, so I know how it is.
we all have. We all have.
Right. So it kind of leads me to my next point with, you said Ethereum, right? It has been pumping the last 5 weeks up over 100%. And we know that's got to have some influence from the 2.0, the merge that's coming up, right? It's pretty cool what's about to happen. What do you think about that? Like, do you have any feedback or insight into that?
Yeah, let me give you the pros and the cons of the whole situation, because there are pros and cons. So the pros are the merge is coming. Guys like who've been in crypto for years. I'm talking about years. We've been waiting for this to happen. Like, this has been a long awaited thing. It's very exciting. It gives Ethereum a triple halving all at once, and it almost makes it deflationary, which for Bitcoin maximalists, this has always been the knock on Ethereum, is it's so inflationary. That's been their whole talking point.
Yeah.
Well, after the merge, that's no longer the talking point. And I imagine long term, the merge and the triple halving are going to have very positive price action on Ethereum. And I'm very bullish on Ethereum long term, very bullish. I imagine it will outperform Bitcoin over the next several years. But here's the downside. In the short term, the merge is about a month away, and this is more likely a buy the rumor, sell the news type of event.
Yeah.
So whales have been accumulating. They see retail show up, and then right when the merge happens, they sell out, and retail gets caught holding the bags. So I imagine in September, after the merge, you're going to see a price dip in Ethereum, which most retail investors are going to be shocked by.
Yeah. Because traditionally, a lot of times during, big news like this, retail investors are looking for a big pump, right? They're thinking this news brings instant pump and they're going to 3x whatever they buy leading up to that.
Yeah, so there's two things to really take away from this. There really is. One, although, in the short term, things aren't going to change exactly on the day of the merge. Like, there's going to be a lot of confusion, there's going to be a lot of profit taking, and it's not like Ethereum's just going to rocket right up once the merge happens. No, if you look through the Bitcoin halvings, there's a lot of excitement up to the halving, and then when it happens, it kind of just goes dead for a while, and then it pumps heavy later once the effects of the halving kick in, the tokenomics of it all.
Yeah.
Retail investors hear great news and they watch all these videos on YouTube, and on YouTube, on crypto Twitter, there's all kinds of people. Oh my God, Twitter, Ethereum, 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 Ethereum. Look, Ethereum's great, and this merge is amazing. It's going to have great long-term effects, but short-term, your whales are going to take advantage of this situation, and they're going to buy the rumor and sell the news, and then retail's going to get dumped on like they always do.
And I guess that's kind of the definition of a bull trap then, right? That's really what it is to its core. Or am I kind of mistaken on that?
Yeah, no, you nailed it. That's pretty much how bull traps get created and how they always end up going out, right? And you're right, 100%, Paul. There's also something else that should be taken consideration. We've had a relief rally now, but if you've seen, and we've talked about this before on the show, at 24,000, Bitcoin can't hold it.
Yeah.
It keeps slipping back down. Eventually, after you keep retesting that $24,000 mark, eventually there's a fall down. And like I said before, I see sentiment. A few months ago, crypto sentiment was an all-time low. It hit a number that's never hit before on the greed and fear index, which it hit 7. It's never hit 7 before. It's hit 8, but never 7. And right now, I think we're sitting in the 30s. That's how much positive sentiment has gone up on crypto. Retail investors are short-term minded. They don't realize that we are in a horrendous global economic situation with all kinds of black swan events that are waiting to happen.
Yeah.
They just don't realize that this isn't a bull market. This is possibly a brutally ugly bear market that we're just sitting in.
Yeah.
Yeah.
It's a great point. It's interesting because I know for a long time I've been a retail investor and you've kind of helped try and mold me and transition me out of it. I still have some of it in my arsenal, just my mentality in general. But I do find a lot of interest in that because a lot of people think with crypto, it's like a get rich quick thing, right? Get rich quick investment. And in my opinion, if you think about the technology and the underlying, everything behind it, that's where you'll really find the long-term value in this. And that's, I think what we're trying to do here with Cryptoversity, right, is just teach that part of it.
Absolutely, Paul. That's pretty much our whole goal here is educating you to get you out of retail mindset, psychology of investing.
Yeah.
There are so many angles you need to learn about. Like, for example, most people in crypto only think about crypto. They don't realize how the stock market, the bond market, the real estate market, how the Chinese housing market, how Europe, how all these things, or the Federal Reserve, how they have effects on the price of crypto.
Yeah.
And the more things you understand and the more educated you become, the better your portfolio will perform and you won't fall for whale games.
Yeah, exactly. You won't be part of the pump and dump schemes and shit coins and things like that, right? That's just
You won't, yeah, you won't be food for whales. Yeah.
You touched on something there, and I'd like to expand on it a little bit because I know I saw a post on Twitter about the Chinese real estate, right? The housing market, the stock market issues, and how that can impact us. Because I don't own any Chinese real estate, so I wonder how does that impact me at all?
Yeah, Paul, this is super scary, and nobody's talking about it. This is Michael Burry, right? I don't know if you ever saw the movie The Big Short.
Yeah.
But Christian Bale played him, and he's a real life character, and that story is a true story. In 2008, people like him and I were telling anybody who would listen that this is going to end badly, that the U.S. housing market is going to absolutely collapse, and it's clear as day. I don't know why anybody's not talking about this. And it happened, and he was right, and he made billions of dollars off of it, right? Well, we have a situation in China right now that makes the 2008 housing crisis in America look like child's play.
Yeah.
And there are all kinds of red flags that are starting to pop up. The first red flag was about a year ago when Evergrande, the biggest real estate developer in China, said, we can't pay our loans. That was huge red flags. If they can't, that means all the other real estate developers cannot as well. And the thing about China, which is even worse than America, is China's housing development is so insanely leveraged. Owning property in China is extremely valued. Like, families want to own property more so than anywhere else. So what will happen is a real estate developer will say, hey, look, we're going to build out this massive building. And they start selling to the retail investors, and the retail investor gets a mortgage, and they usually what they'll do is they get like 3 or 4 families together to buy this one little condo somewhere.
Mm-hmm.
And that condo's not going to be built for years. And right now, there are massive, I'm talking about huge cities that are completely built up, but they're unfinished, that nobody lives in. I'm talking about cities the size of Cleveland or bigger that are just ghost towns. And it's crazy to look at. So another red flag in this situation, Michael Burry just yesterday came out and said he's selling all of his stocks because of this. And recently, in the last couple of days, Chinese corporations that are traded on the U.S. stock market, public stock market,
Mm-hmm.
they've started saying they're going to pull out of the U.S. stock market. That's what they're saying. But really what's happening is U.S. regulators are saying, we want to see your books. We want to see your audits because we know how much danger is sitting in your economy, in the housing sector, and we want to know how much exposure our investors have.
Yeah.
So what's really going on is the U.S. stock market is trying to get as much exposure to this horrible situation as possible. So they're trying to kick out all these Chinese companies like Alibaba. Alibaba is a massive corporation, one of the biggest corporations on earth. But we know if they're a Chinese corporation, they have exposure to housing, like because corporations have well-diversified portfolios. So real estate's going to be in there. And that's the scary thing that's happening.
It's not stable at all, it sounds like, or at least it is maybe fabricatedly stable right now. But
here's the scary part, Paul. And here's what I think most people don't realize. Like you said, you don't own Chinese real estate. What do you care, right? Here's the problem. In 2008, we were literally hours away from every U.S. bank collapsing, and therefore soon after, hours away from every global economy from collapsing from the 2008 housing crisis. The Federal Reserve, like really late at night, had to pull all the CEOs in from the major banks in America, like Citigroup and Lehman Brothers and all these things. And they had to say, look, we're giving you billions of dollars. And a couple of the banks says, we don't need it. We don't have exposure. And the Federal Reserve says, no, you're taking this money. And that's all there is to it. They had really no choice. And this saved the whole globe, not just the United States, from the worst depression collapse in history. So just think of the global economy is interlinked. In the 90s, the idea of globalization was very popular. That's why NATO and the European Union and all these things started creating. But now that that has happened, everything is connected. So if China's housing market is as ugly as it looks and it collapses, the contagion doesn't stop at the Chinese border. It travels to the U.S. stock market, it travels to the banks, it affects bonds, it affects cryptos, it'll affect the pricing of your house. And it could be the worst collapse we've ever seen. It has that kind of potential. This is why when people ask me if I'm bullish on crypto right now, I would love to be bullish on crypto. I lean bullish. Long term, I'm hardcore bullish. But right now, staring down the bullet of this gun that China's holding, I don't want to hold anything. I don't want to hold stocks. I don't want to hold crypto. I don't want to hold bonds. I don't want to hold anything. I just want to hold dollars, because if this goes bad, it goes really bad.
Well, that's some pretty intimidating stuff.
Yeah.
I learned a lot from it too. It's just so interesting to me because, you don't really connect the dots that way. A lot of retail investors certainly don't think about things like this. And we just think about what's the coin of the day that can 10x my gains and stuff. You're not thinking about the long-term impacts of economy and other countries and things like that. So it's pretty interesting. And I really do, advise people to educate themselves on this stuff, right? Because this is what makes you an educated investor versus a retail investor.
You nailed it, Paul. It's all about education. That's our goal at Cryptoversity. It really is. Our goal is just education. the smarter you are about the things you're investing in and the environments that they swim in, the better your performance will be. And that's the truth.
For sure.
Yeah.
Cool, man. Well, thanks for taking the time today. I learned a lot from you as always, and look forward to talking to you again soon. We'll go for tomorrow.
Brother, man, I appreciate you as always.
All right. Thanks.
Yeah.